Hey folks, it's Simon here. Welcome to your Tao Daily for market close as of Monday, the 21st of April, 2025. Monday was another rough day on the markets. S&P losing 2.36%, Nasdaq down about 2.5%. And what's really roiling the markets now? No, it's not trade wars. It's President Trump's attacks on Jerome Powell. Honestly, the most dangerous risk in markets right now is these attacks on the Fed. And if you think this is just politics or about Trump letting off steam, think again. This is about confidence and trust in the whole system. Because if the president attacks the independence of the Federal Reserve, that is really a threat to the very belief that monetary policy is guided by data and not politics. You see, the belief that monetary policy will balance controlling inflation and supporting economic growth forms a bedrock of trust that underpins $102 trillion in debt markets and $56 trillion in equity markets. You remove that and you're literally removing the spine from global financial credibility. So yeah, I think this is kind of a big deal, and I think markets are right to tread cautiously around this news. So right now we've got an S&P 500 that is dealing with trade war chaos, potential recession risk, and now potential central bank intervention or interference. Now, these are threats to the system that justify valuation discounts, not premiums. You see, stocks still aren't cheap, even after this pullback. The S&P 500 is still trading at about 20 times next year's earnings, which means it's trading at a valuation premium to any year between 2002 and 2018. Where conditions arguably now argue for greater caution, not exuberance. So how do we trade a market like this? Well, volatility is still juiced up. Right? We can see that on the Tao market dashboard. Implied volatility for the S&P 500 is in the 98th percentile. Just means it's higher now than it's been 98% of the time over the last year. So, still focusing on trading spreads. Came out of a trade in Broadcom yesterday. It was in that trade for about 3 days, made a quick 50%. Not everything is bearish though. I've got a long position in Dollar General. This is working really nicely. I'm currently up about 50% in this one. You don't want to get 100% short in a market like this, as bearish as everything looks, because as we saw back here on the 9th of April, this is when there was a 90-day stay of execution on the tariffs. There's a lot of pent-up buying. We get a benign headline, market will whipsaw higher. So it's really about isolating really high-quality setups. If you'd like to see how we do that, if you'd like to learn more about the indicators that we use, if you'd like to learn more about the scans and the dashboard that we use, please come along to today's event. Just head on over to www.taoftrading.com/event. Save your spot, and I look forward to talking you through our process today. Thank you.